8.1.8. A newly formed company has applied to the commercial bank for the first time for financing its working capital requirement. The following information is available about projection for the current year. Raw material, direct labor and overhead per unit is given and total comes to 85. Profit is 15 and total comes to 100. Raw material in stock, average of 4 weeks consumption, work in progress, completion stage 50%, on an average half a month, finished goods in stock on an average 1 month. Credit allowed by suppliers is 1 month, credit allowed to debtors is 2 months. Average time lag in payment of wages is half week, 4 weeks in overhead expenses. Cash in hand and bank desired at 50,000. All sales are on credit basis only. Prepare a statement showing estimated working capital needed to finance an activity level of 96,000 units of production. Assume that the production is carried on evenly throughout the year and wages and overhead occur similarly. For the calculation purpose, 4 weeks may be taken as equivalent to a month and there are 52 weeks in a year. From the above information, calculate MPBF by all the 3 methods of working capital as per Tandon Committee norms. Tandon Committee will be understanding in this question. Assume core current assets constitutes 25% of current assets. For Tandon Committee, this will be relevant. Independent of 2 above, compute what working capital limit will be sanctioned if the bankers have agreed for retaining the margin as a raw material 20%, WIP 30%, finished goods 25% and debtors 10%. So again, we'll be finding out current assets, current liabilities by the same method we were doing before. Let us go one by one. Raw material in stock, average of 4 weeks consumption. Let's start with raw material. Activity level 96,000 units into 4 weeks consumption is 4 divided by 52. 7384.61. Answer is coming in decimal. Let us try out this. 4 weeks is 1 month. We can take this divided by 12. 96,000 divided by 12, which is 8,000 units. I knew that 96,000 divided by 12 I would be getting without decimal answer, so I have taken it. 8,000 units. What should be for raw material cost? Should be taken as rupees 40. Let us put it in our Excel sheet. Raw material, (8,000 units). Rate applicable is 40. Total will be 3,20,000. Work in progress, completion stage 50 on an average half a month. WIP 96,000 into 0.5 divided by 12. 4,000 units. What will be rate applicable? Please try to concentrate. Rate applicable will be, what is the total cost? 85. What is completion stage? 50%. I will be taking 42.5 rupees as the WIP cost. Or I can always assume raw material is 100% complete and this 45 conversion cost is the 50% complete. 45 into 0.5 plus 40. I can take 62.5. Sir, which is the correct answer? Both are correct answer. You may always assume that raw material is 100% complete. If you see the language, completion stage is 50%. Both can be interpreted, but this is more appropriate answer. But still in this question, I am taking 62.5 just to match my answer with suggested. See, for me, it is sometimes necessary to tell your answer with suggested because it gives you somewhat confidence. But even if in your examination you have taken 42.5, the answer is 100% correct and you will be getting 100% marks for it. I'm taking here 62.5. So WIP will be 4000 units. At 62.5. I can go ahead. Next is finished goods in stock on an average 1 month. Let us start. Let us do finished goods. Level of activity 96,000. Period is 1 month. This will be 8,000 units. What cost should be considered for finished goods? So full production cost, which is 80, because finished goods will always be 100% complete. So finished goods 8,000 units. Cost will be 80. I can go ahead with credit allowed by supplier is 1 month. Creditors, again I can do some juggling and find out how many goods are purchased, but in absence of opening stock and closing stock I can get it, but in absence of opening stock you should always take 96,000 units. Credit period allowed is 1/12. $8,000 units. In creditors, I'll be taking only raw material cost, which is 40 rupees. I will be getting answer of creditors 8,000. Rate of 40. Credit allowed to debtors is 2 months. Debtors, assuming all sales is on credit, into 2 divided by 12 is 16,000 units. The rate applicable. See, in absence of information, you should always take total cost, ignoring profit. But in some of the cases, you may take even selling price. If bank is ready to finance your selling price, you can take debtors as selling price. If I am in your place, I always take cost. But for the purpose of telling my answer with suggested, I am taking selling price. If you take cost, your answer is 100% correct. You will be getting 100% of marks. 100 rupees. So debtors are 16,000 units at the rate of 100. I will be getting debtors. Average time lag in payment of wages. This is for outstanding wages. 96,000 into 1.5 weeks. Two 769.23. And for outstanding wages, we should be taking 15 rupees. wages payable 2769 at a rate of 15. .4 weeks in overhead expense. Overhead outstanding 96,000 into 4. Instead of 4, I can take 1 divided by 2. $8,000 units and overhead cost is 30. So for overhead outstanding 8,000 at the rate of 30. Cash in hand and back at desired level is 50,000. Cash and bank required is 50,000. And I have practically taken into consideration all the points. I have got the answer of all current assets minus current liability, that is net working capital. Also I am having on end 22,98,465. Let us understand maximum permissible bank finance, which in short is also termed as MPBF. As per Tandon Committee. See, Tandon Committee has suggested that this is the maximum amount bank should finance. There is no compulsion in it that bank cannot finance more than this amount. But Tandon Committee has given its recommendation that this is, say your working, what is working capital required right now? 22,98,465. Bank will never finance 100%. It is always tell its customer to bring in margin money. So how much percentage bank should finance? That is suggested by Tandon Committee. And it has suggested 3 methods. Method number 1, it says bank should finance 75% of current assets minus current liability. As per this method, in our case, it will be 75% of current assets minus current liability is 22,98,465. 22,98,465. This should be maximum permissible bank finance. Number 2. Method number 2. What does Tandon Committee suggest? 75% of current assets minus current liability. Both are different. Here 75% of only current assets will be considered. Current asset is 29 lakhs. Minus current liability is 6,01,535. This is the second method. What is third method? Understand. Third method, which says 75% of current assets minus non-core assets. This core assets. Current assets minus core assets minus current liability, which is equal to 75% of, what is our current assets? Current assets are 29 lakhs minus, what is core current assets? Please understand, they will have to specify what are core current assets. Core current assets constitutes 25% of current assets. So it is 25% of 29 lakhs minus current liability, that is 22 lakh, sorry, 6 lakh 1,530. We need to find out MPBF by Tandon committee under all three methods, and this will be our answer. 22 lakh 98,465 into 75% is 17 lakh 23,848. Second method is 29 lakhs multiplied by 75% minus 6 lakh 1,535, which is 15 lakh 73,465. Third method, 0.75 into 29 lakhs multiplied by 0.75 minus 6 lakh 1,535, which is 10 lakh 29,715. Please understand, Tandon committee has recommended that bank follows either first, second or third method and find out maximum permissible bank finance. Please understand, this is not an act, there is no compulsion. This is only suggestion by Tandon committee for maximum permissible bank finance. Let us go to question number 3. Independent of two above, compute what working capital limit will be sanctioned if bankers have agreed for retaining the margin raw material 20%, WIP 30%, finished goods 25% and debtors 10%. What does it mean? Your margin down payment for each should be this. Bank has not followed the recommendation by Tandon committee. Bank is having its own policy. As I told you, Tandon committee is not compulsory and bank is having this policy. We need to find out working capital requirement. All right. As per bank's policy, what is net working capital in our case? Net working capital is current assets minus current rates. This figure 22 lakh 98,465. 22 lakh 98,465 rupees. How much margin is suggested by bank? Minus margin. 20% in raw material, 30% in WIP. 20% in raw material, 30% in WIP, 25% in finished goods and 10% in debtors. 25% in finished goods and 10% in debtors. See what bank is saying. For raw material requirement, your working capital requirement, you should take out 20%. That is, your margin money will be 20%. For WIP requirement, your margin money will be 30%. For finished good requirement, your margin money will be 25%. That is 75% remaining will be financed by bank. And for debtors, 90% will be financed by bank and 10% will be brought in by owners. What was the raw material requirement in our case? Raw material was 3,20,000. WIP was 2,50,000. Finished goods was 6,80,000. And debtors was 16 lakhs. So this is the margin money which is to be brought in by owner, which will be 3,20,000 into 20% is equal to M plus 2,50,000 into 30% is equal to M plus 6,80,000 multiplied by 25% is equal to M plus 16 lakhs into 10% is equal to M plus. MRC is 4,69,000. 4,69,000 is my margin money. How much bank will finance? See, my working capital requirement was 22,98,465. Bank is saying that you take out margin money of 4,69,000. So remaining bank will finance 8,465, 4,69,000, 18,29,465. This is bank finance as per bank policy. Maximum permissible bank finance as per Tandon committee. And this is how we have calculated working capital requirement. Excellent question. See 8.1.8.